Hey everyone, hope everyone had a happy holidays and thanks for tuning in today. If you guys can hear me okay, can someone just send a quick note to let me know? Perfect. Thank you, Brendan. We'll just give it a couple of extra minutes just to see everyone, anyone that's late wants to jump on. So I hope everyone had a happy holidays. Hoping that the next couple of trading days for the year are positive all around, so we can go into 2024 in good spirits. So before while we wait for the last a couple of people to pop in, originally the today's webinar was going to be kind of an update on VST, a bit of a recap on the Q3s. We got an overwhelming response, and this has happened before from investors that wanted me to be as brief as possible on that stuff and kind of get to the investor questions. And so there were a lot of questions that came in. So I'll try to be brief with the recap on VST 2023, and then try to focus more on the questions that have been sent in. If I'm not able to get to all the questions, please feel free to send any that aren't covered, and I'll make sure that we get them answered and posted. We'll do another webinar within the first 2 weeks of January, which will focus more on kind of 2024 and our plans, on a go forward basis. But I'll try to get to as many questions as I can today. Why don't we get started? So thank you everyone for tuning in today. My name is Shafin Tejani. I'm the CEO of Victory Square. I just mentioned, that today's webinar we'll try to kind of breeze through a little bit of recap on Victory Square, the business model, a quick recap on and snapshot on where the business is today. And then I'll try to tie into the questions as soon as we can, given that there were a lot that came in. I'm just going to share my screen here really quickly. Can anyone see the screen clearly? Just at a quick note. Perfect. Thank you, Brendan. So, Victory Square, we provide VC investment access through a publicly traded company to a basket of early stage tech companies from all over the world. As a public company, we're audited, try to be transparent, and it's a liquid investment vehicle in that shareholders can buy and sell VST shares. This is just a bunch of disclosure information. What is the problem that we're solving, and why was VST created? So just a refresher, VST was created because I was getting, as an investor, I've been an entrepreneur and investor for 20 plus years. Thankfully, given the nature of my business, I was able to find really, really bright entrepreneurs and companies that weren't just geographically close to me. So companies and entrepreneurs in Europe and India and Brazil. And so the thought process was to put all of those companies into one publicly traded vehicle, so retail investors or angel investors could have an opportunity to invest early in some of these bright entrepreneurs and companies from around the world, given that they didn't have to necessarily be around their geographic region. Some investors don't qualify to invest in certain tech funds. And so the idea of Victory Square was to create a public vehicle that would allow investors from all over to invest in one company. And then we would put together a basket, the management team would put together a basket of some of these bright entrepreneurs and companies from kind of all over the world, and you could buy and sell as you please. And these companies were audited, transparent and liquid. And so that was the problem that we saw. And again, Victory Square was the creation of Victory Square was to provide investors with a liquid way to invest in early stage technology companies without buying a venture fund that required accredited investor status or multi-year commitments. A big part of the solution was also the diversification, and that, as many people have seen over the last 2 years, technology stocks in particular have been hammered. But for VST, we've been fortunate in that our portfolio is very diverse. So as a couple of companies, maybe let's say in the Web3 sector and space, weren't performing as well, we had ones like Hydra that operationally were performing very strong in the digital health sector. So this basket and portfolio approach also is is strong because it diversifies that risk and mitigates risk for investors. Quick snapshot of Victory Square. So we have just over 25 companies, predominantly technology companies. These are companies and founders from all over the world, and covering sectors like digital health, artificial intelligence, machine learning, blockchain, Web3, virtual, augmented, and mixed reality, gaming, and climate tech. We do have companies in cybersecurity in other areas, but these are I would say these sectors kind of make up the core of our portfolio. And a lot of our focus in 2023 was really focused around digital health and Hydrate, as many people have watched the Hydrate webinars. The current NAV is probably around 80 million Canadian dollars. This is a combination of our public holdings, private holdings, and management reviewed kind of incubating companies. That we're a venture studio, so at any given time, we're building IP internally. If anyone follows the VST share price on a regular basis, our market cap right now is about 12 million Canadian dollars. So we're trading at a significant discount to what the value of the unaudited NAV is currently. From a cash flow perspective, Victory Square is a very, very lean operation. I know a lot of people and a lot of questions kind of were revolving around, like, how does VST make money and how does it continue? We have access to sufficient runway. I'll explain in one of the questions how we kind of operate the business, but we have cash and liquid securities of around 5 million Canadian dollars. Very, very low burn, so there's no challenges or issues with cash flow or the fear of dilution. We have strong inside ownership. This inside ownership number has probably increased a bit since, and the management and ownership of VST is a combination of myself as the largest shareholder and the CEO, but also a lot of our portfolio companies, the team and the founders themselves are shareholders in VST. This also creates a really, really, I would say, an unfair advantage, and we've got this ecosystem where we can tap into bright minds in different sectors who can kind of add value to the company as a whole. So, what are some of the advantages and benefits that we have in getting access to companies and growing and scaling companies? So we have what's called a venture build model. We identify opportunities early. Once we've identified them and have a really good entry point, we kind of assemble a team around that founder or founding group, and we help build and scale that company. And eventually the goal is to kind of spin it off and have it operate as its own entity, but give VST equity in that company as it grows and scales to larger heights. And we're big believers in compounding. I think within the technology space and in my experience, generally it takes between 5 and 10 years to really see these companies go from infancy and startup to kind of achieving their true potential of that. And we've assembled a really, really strong ecosystem to be able to do that. Our management team itself has years of experience. I personally started in the mid-90s in the first dot-com boom, and have been very fortunate to kind of ride successive waves. We have an internal incubator here in Vancouver, BC, called Launch Academy, led by an outstanding team. And what they're able to do is, always give us an opportunity to see talent early. They have relationships with incubators and accelerators all over the world. And so when there's companies that kind of fit what sectors we're focused on, we get access to them first. And through Launch Academy, we also have the option of being able to get some of these companies what's called a startup visa to be able to come to Canada or North America and grow and kind of build their business. It's also allowed us to develop a really strong network, not only with the different companies and portfolios they're in. We're able to kind of cross collaborate talent, customers, best practices. So there's this ecosystem that's been built of founders and teams from all over the world that can really help us identify what sectors we want to go into, or when we're having a pain point with one of our portfolio companies, be able to leverage that. So there are a number of advantages that we have with the ecosystem that's been built to not only allow us to get access to good companies from around the world, but help build and scale those businesses to, you know, to get to their potential. So in the past 6 or 7 years, we've, you know, evaluated thousands of companies. In 2023, we weren't as active evaluating new companies as we were working with our existing portfolio and identifying some new areas that we wanted to go into. I'd mentioned earlier the portfolio is around 25 companies. We've invested around $13 million into those companies, and I mentioned the current NAV, which has kind of stayed flat over the last 2 years. We had seen it grow significantly in 2017, 18, 19. 2020 was a big spike, and 2021 was a big spike year for us, but the last 2 years we've seen it flat. However, we've seen the companies themselves continue to grow and strengthen, and we feel confident, you know, that that number will increase. Our goal, you know, is to double the NAV every 3 to 5 years. Big believers in compounding value, and so, you know, for the last 2023 was really focused on, you know, going deeper into some of our portfolio companies. There was obviously a lot of triage as the year was challenging for a lot of companies, and we wanted to make sure that the core assets we had were in good shape, where we could help certain of the companies grow. There were certain companies we need to restructure, others we needed to you know, that we assisted with M&A and financing and funding avenues. But 2023 was really more of not a year of us necessarily going wide. We kind of went deeper into our core portfolio companies to make sure that they were in good shape. I'll get to this question because it's a question that came up, is how is the NAV calculated? So it's kind of broken into 3 categories: public holdings, private holdings, and companies that we're incubating. Now, the companies that are public, it's a mark to market. So you're generally just looking at the number of shares we own in specific companies and what the last trading price is of those companies. And then in some cases, there's a discount taken towards the lack of liquidity in some of those portfolio companies. Then with respect to private companies, it's a combination of management review, last financing, and third-party valuation. Now, a lot of the third-party valuation on private companies was done as part of our 2022 audit. We are now going through our 2023 audit, which is due by the end of April of 2024. And you'll see a, you know, repricing of the private companies, excuse me, by a third-party agency. The other, which is companies that we're incubating. So we operate a venture studio, and so we're always building IP internally. Like I mentioned, there's a lot of sectors that we're in and involved in, and when the market or tide turns down on them, we focus more on the development and build of them. One of the companies we've seen come out of the incubating kind of category in 2023 was Insu Therapeutics, which I think some may have tuned into the webinar, which is a company that's focused on a provisional patent for oral delivery of insulin, amongst other types of medications. And so with incubating, you know, this is where we tinker and we build IP internally. The portfolio is diverse. These numbers, you know, whereas we're after our 2022 audit was completed, and some of these numbers will adjust and be updated when the 2023 audit comes out, which is due at the end of April. But this gives an example of the diversification that we have, where, you know, we have companies in the renewable sector like Strata Solar, sports betting like Fans Unite, Hydra, obviously in the digital health sector and space, Copilot, which is in the AI space, Covalent, which is in Web3. So distribution of diversification of companies, sectors that all kind of make up, you know, the VST kind of value proposition. Like I mentioned at the beginning, we will focus and host another webinar in 2024, probably within the next 2 weeks, that we'll dive deeper into the 2024 catalyst. But the request was to kind of breeze through this quickly and get to the questions. But high level, you know, there are a couple of big catalysts that we expect. One is Hydrate's growth. So VST owns around 68% of Hydrate. It's a core holding. Our team is actively involved in that business. And so there have been a couple of milestones. I'm not sure if investors, VST investors, aren't aware. definitely check out the most recent Hydrate webinar. I would follow the ticker as well. The company's been performing and executing at a high level, but there's two recent webinar and releases that are focused around their release of semaglutide. So Hydrate healthcare providers and their patients now have access to these semaglutide GLP-1s, which in 2023 some have said that GLP-1s have garnered more attention than AI, given that name brand products like Ozempic or Novo Nordisk's Wegovy was used for weight loss, and so a couple of big things for Hydrate. Their healthcare providers can now get access to to these GLP-1 semaglutides. And also, Hydrate's really been focused on expanding their white label platform and just organic growth and M&A, which has been a big part of their year. So we expect that to continue into 2024. Spinoff. So Stardust Solar, has been that whole process has kind of been delayed. The founder decided when the market turned in, at the end of last year, to kind of pause his the go public listing for Stardust Solar. I'm happy to announce that they signed a definitive agreement yesterday, which they notified us of, and their intention is to be listed with by Q2 of 2024. So big thing, the definitive agreement was signed for them to go down that path. That had been delayed, so thankfully it was a big nice way to close out 2023 for us. The other is Futura Health and Wellness. This was another company that was kind of incubated internally, that amalgamated with another company earlier in 2023. Their plan is to be listed by Q2 of next year as well. So both of those will unlock value for VST, and both sectors that we're bullish on. Stardust, obviously renewables and solar. Futura, it's focused on the health and wellness, specifically longevity, biohacking, which is a sector that we believe in. The other is just new incubated companies within the sector. Like I mentioned earlier, given the success of Hydrate and given the emergence of Insu, the digital health, precision medicine, preventative medicine, this was an area that we've really kind of doubled down on. And so we have some interesting, solutions coming out in that sector and space. About a week or two ago, I was at a conference in Las Vegas called Longevity Fest. Really, again, looking at additional opportunities and ways that we can kind of expand our existing IP in the longevity, biohacking, and preventative space. So these are really briefly three catalysts that I think are that we're looking at in 2024. One last one is, obviously, people that are tuning into this webinar have followed VST's share price over the past 2 years, and it's declined. And we've seen that overall within the microcap space, a lot of the VST spinoffs have not performed well from a share price perspective over the last 2 years. We feel that after 2+ years of the negative sentiment, that there could be an uptick in rally in those. And in the past, when VST portfolio companies have performed well, VST's performed well, as it's probably the strongest indicator of the type of IP that can come out of VST. And so as they're lagging, we've seen the a negative sentiment on VST share price as well. But we're very bullish on portfolio companies like Hydrate, Game On, VR AI, despite their challenges over the last year, and Insu. And so we're confident that those companies will have a strong 2024, which should impact VST's share price. So that's another catalyst that, again, we're looking forward to. This ties into some of the questions that were asked as well, which why should someone invest in VST? And as an investor myself, the biggest thing I always look at is entry point. As a starting point, what am I? You can find a good company but pay too much for it, or you can find a good company and find a good entry point to get in. So from a VST perspective, I think it's a good time to start to follow the stock even more, given that we're trading at a significant discount to our NAV. One of the other things I mentioned at the very beginning, and for investors, you're hearing all these buzzwords like AI and augmented reality and cybersecurity and all these different sectors. it's hard as an investor to get access to some of these companies on the microcap space, so companies that haven't necessarily, let's say, blossomed into what their true potential is. And the purpose of VST was to give retail investors the ability to invest into a basket of some of these companies. So I think that is as we see technology continue to accelerate and innovation continue to accelerate, it's not going away. So irregardless of the markets being soft, technology is going to continue to advance and make our lives, more efficient in general. And so I think, again, one of the other benefits of VST is that you're getting access to a lot of these sectors when they're all at their, kind of low. So it's a, diversified kind of risk-adjusted investment approach. Experienced leadership and active management. So we are shareholders and we are actively involved in the business in some of our core companies. And the last is liquidity. As an investor, if you go and invest into an early stage private tech company, you have no liquidity. They're generally not audited. Here, we're putting that basket together. So wherever you're trading in this world, wherever you're living in this world, you have access to trade the stock or invest into in the stock. So we think that that's a big benefit for shareholders. So hopefully I didn't take too long with that. I'm gonna stop the share and get to the questions. Let me pull up. So there were a lot of questions that were sent in. We'll try to get to as many as we can. Is my screen still sharing? Don't just send me a quick note. Is it off share? So a lot of questions, we tried to organize them based on what we thought were, some of the more important ones to kind of prioritize them. I've kind of grouped them together. I know the most important question really is around the share price. So we got a lot of questions around the VST share price. Obviously, shareholders are concerned about their share price. There were questions as to why we aren't concerned, and kind of what is the aim for the future of the share price? How do we intend to get the share price up? So there were a lot of questions around the VST share price, and I want to start by saying, the team and I are all upset about the low share price. Having a low share price and having shareholders that have entrusted us be unhappy is not something that we're happy about. There's no doubt about that. I would say, upset and concerned are kind of two different things. So are we upset? Yes. Are we concerned? No. And I think we're not concerned. We're not concerned because we see what the value of the business is. We know what the core assets of VST are, and we see the growth of those assets, and more so during challenging times. It's one thing to have a portfolio when everything is flying high. It's another to see that portfolio be able to make it through 2 very challenging tech years, right? Our companies are not down and out. We've really seen that generally when the markets are down or when a tech sector is down, a lot of times that's when the real builders emerge, because those are the ones that aren't giving up. There's a strong why there. So we're upset about the share price. We're not concerned, and we're not concerned because we see what's happening within our portfolio. We see the growth of that portfolio. We see some of those companies not only continue to grow and thrive during challenging times, but we've seen others that have really kind of pushed through and are waiting for that. A lot of times it's just being able to stay in the market or stay in the game until your time comes. And there are a lot of catalysts from a sector perspective next year. Like, we think Web3 will have a good year, which should impact game on and VR AI. We think, with the Apple Vision Pro, that's another big catalyst moment for VR AI, given that that's going to bring, VR even more to the mainstream. So again, digital health, as more and more people get concerned about quality of life, and they've got the tools and technology to be able to track things, we think these are catalysts that are going to, continue to go on a go-forward basis, be important. So we're not concerned. We also kind of look at the overall markets. If VST and our portfolio companies were the only ones that were down, or the only ones having a challenging time, then there would be some concern. But the overall microcap space has been flat for a while now, and sentiment is that they think that that'll rebound into 2024. Irregardless of whether it's next year or the year after, what we do know is our companies are in good shape and they're continuing to grow. So upset, not concerned. But again, what I know that it's now been 2 years of share price of our share price sitting at these levels. So what do we plan on doing, aggressively on a go forward basis? Well, we found in the past that when a VST portfolio company has a catalyst or a big milestone, it's generally impacted our share price well. Again, we saw that in 2020 and we saw that in 2017. So in the past, when something big happens within one of our core portfolio, we think it has a positive impact on us. So aside from VST, attending investor conferences, doing broker and investor outreach, putting out thought leadership, pieces, doing a better job of communicating. I know that in the latter half of, or the last couple of months, we haven't been as active on in our webinars and our news releases. These are just the traditional things of us having to do, like attending conferences, reaching out to brokers and new investors, putting out thought leadership pieces, communicating better. Those are the things that we'll continue to do. But I think where we'll see a big benefit will be leveraging our portfolio companies doing that. So as an example, every time Hydra presents at a conference or puts out a news release, it provides new eyeballs for VST, and the same for a company like Game On, etc. So I think in addition to us doing a better job of being more aggressive and communicating in all of these, to attract new investors, I also think as our portfolio companies do that and continue to do that, that should bring more and more eyeballs and attention, and people kind of following the VST story. One side note too, for anyone that's a long-term shareholder that's kind of tracked our share price, I think we saw our share price jump in 2017, and then we saw it down in 18, 19, and 20, and then at the tail end of 2020, or August, September of 2020, it jumped. Then we saw 2021, 2022, 2023 down. So we've kind of gone these cycles where there's like 2.5 to 3 years of like down, and then and it's gone in cycle with the CSE index and the microcap space as a whole. So hopefully that as markets, we know markets always continue to to come around. Hopefully that's also another indication that we've had that 2.5 years now of sitting flat and down, that investors are going to kind of come back into this space, and we know that our companies are stronger now than they were in 2020. And if someone's looking at the microcap space as a whole, we've seen a lot of companies kind of fall by the wayside. We've seen companies take on really, really bad debt or really, really bad, financings that are heavily dilutive. We haven't done any of those types of things. And so I think one of the things is we've kind of kept our cap structure clean during this period. We as investors have continued to consolidate and buy up VST shares. And so I think that, excuse me, that those are other good indicators of when that market turns, that VST is in good shape and its portfolio companies are in good shape to benefit the parent. Sorry, one second. Another set of kind of questions that came in that kind of related to the share price were around how can we reassure shareholders that we won't have, we don't need dilutive funding to keep the business alive and continue to increase value. This also tied into are we going to need to do a financing with respect to how does VST operate and continue to run its business? So there's I think some investor and shareholder fear on do you need money to continue to grow or keep the lights on, or and if so, is that going to be dilutive? So I'll start by saying we have no intentions to do an equity raise at these share price levels. We're not interested in dilution at these levels. We think the company is significantly undervalued. One of the things we've done is we've maintained a very, very low overhead for VST. I mentioned earlier, one of the big advantages we have is we have an ecosystem of portfolio companies. So we can access teams, tech, customers, advisors, and best practices from the entire ecosystem, given that they're also shareholders of VST. So VST itself doesn't have to incur a huge burden or capex or overhead costs. We operate very, 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 very lean, and our team are incentivized more by performance, by the companies, portfolio companies, and VST as a whole performing well. From a business model perspective, our business model is to buy, build, and invest in early stage companies. We spend, anywhere from 12 to 48 months with them. And when they're ready to spin off, kind of spin them off. And it's at that time where we're able to do a couple of things. One, take money off the table. So in the past, we've sold Fans shares in 2020, Argo shares in 2020 when the market was up. That cash flow that came in could be reinvested into top of funnel, so taking advantage of new opportunities. Recently, we've sold some CQT tokens. Again, the token price had significantly jumped, and we saw an opportunity when we had, pretty much a no cost base to get additional capital to reinvest into new opportunities that we've seen. So at any time in our history, we've been able to see when the time is right to be able to take advantage of taking money off the table to reinvest in top of funnel. The other is that a lot of people that have followed the transactions we've done, we've either incubated things from scratch where there's no cost base, or we've gone and acquired or made an investment with VST shares when they're trading at a premium. So that also limits the amount of cash that we need to actually continue to grow. So at any given time, we can continue to grow with a variety of different, tools that we have at our disposal. The whole purpose of VST was built to be self-sustaining, and so that's a big, big benefit. In the past, when the share price is traded up, we've done financing. So, the last one was at 52 cents a share in November of 2020. And we also have the ability to borrow against our assets. So if we don't want to sell anything, if the market's down, if we don't want to do a financing because the share price is down, we also have the opportunity to access, strategic debt because we have assets on our balance sheets, which we've been able to do in the past as well. So we have no intention of dilution. Nothing is preventing us from continuing to grow and invest in new opportunities. We have the resources to be able to do that at our disposal, should we choose to. And in our Q3s that came out, so Q3s as of September 30th, which came out end of November, we have cash and liquid securities of just over $5 million. So there's and a very, very low burn and overhead. So there's no concern about that. We are in great shape. Another question. So you and VST have been very quiet over the past couple of months. We haven't seen many VST news releases and/or webinars. What's been going on? So my bad. I apologize for not providing better communication over the past couple of months. Definitely have to fix it going into 2024. As part of our strategy of building existing trust with shareholders and attracting new shareholders is consistent communication. So I need to do a better job of that, and I will. So my bad for that. But we haven't been doing nothing. Just to note, we've been extremely busy. The latter half of 2023, a lot of it was focused on the growth of Hydra. So again, anyone that's followed that story, significant growth. Anyone that's followed Game On, we've been working closely with Matt and the team there on a new platform and new partnerships. That's why we're really excited about Game On in 2024. They've got a lot of momentum going. Anyone that hasn't seen Matt's end of year video, I think it's posted on our VST YouTube channel. If not, I'll have Abby send it out. Definitely take a look at it. It'll give you an insight into what Game On's got going on. I mentioned Stardust signed a definitive agreement yesterday, so they'll be listing in Q1. So this, we have been working with them and towards this definitive agreement. Same thing with Futura Health. There was a webinar on Insu Therapeutics. So this is one of the most exciting portfolio companies that was kind of incubated in VST. It's a partnership with the University of British Columbia and BC Diabetes. If you haven't seen the webinar, go to our YouTube page and check it out. This is something that we're really bullish on for next year. So we have been busy working on these things. Last thing I'll mention too, we've been there's two other portfolio companies. One is Copilot.ai. It's a private company of ours. The company's been growing, really well managed. They plan on staying private, but they've they secured a significant financing in 2023 and are planning on another large one in 2024. And this is a company that we came in as one of the first investors in. So it's going to realize a huge gain for VST. Again, working closely with it's a core holding, so working closely with them and VRAI. So that's a company that 2022 and 2023 were restructuring years. They've obviously done a very bad job of communicating with shareholders. That's got to change, but we have been working with them on a restructure, and so we need to do a better job of communicating. But we haven't been sitting idle. We've been, again, really focusing on those core portfolio companies. Have you sold any CQT tokens? So yes, we have. If anyone's following CQT over the last month and a bit, the token value has jumped from around 5 cents US to around 23-24 cents US. So we've taken some money off the table there as that's jumped, and our cost based on that is negligible. So but again, we're still believers in CQT, so we took a bit of money off the table there. You've mentioned Hydrate being an outlier in the portfolio. Can you elaborate why you're so excited about Hydrate? Where do you see Hydrate in 3 years? So we're super excited about Hydrate. A lot of our news releases and webinars over the past couple of months have been really focused on Hydrate. I really feel that if anyone is not familiar with it, like, go and check out the Hydrate webinars or Google Hydrate and look at their past couple of news releases. But from a growth perspective, actually from a sector perspective, we believe the at-home care market is significant. It's only going to continue to grow. The business itself, we feel that they've got this first mover advantage and have built some significant barriers to entry, given that they've had to work with 3 boards in all 50 states, so pharmacy, medical, and nursing, to build their this medical platform for nurses. So again, first mover advantage, huge market, first mover advantage, amazing management team that they have. And then numbers don't lie. Their growth in 2023, they achieved record growth, and they ended the year kind of talking about a couple of things that they're focusing on for 2024. One is continued growth, but the launch of their semaglutide GLP platform, so allowing their healthcare practitioners to now and patients to get access to semaglutides, their expansion on their white label product, and just M&A opportunities that they see. So super excited about them. Definitely go and check out the webinars if you haven't. But in the next 3 years, I see kind of one of 2 options with Hydra. One is that it continues to grow organically on its own and through M&A, as we've seen significant growth over not just over 1 year, but consistently over the past 4 years. Or it gets acquired. We've seen a lot of consolidation in the at-home care industry. And if you think about it, I mean, they've built kind of an Uber-like product for nurses. And we've seen companies like Apple and Amazon and them wanting to jump into the healthcare space and sector. Amazon bought One Health. I think it was their last large transaction in the healthcare space. So we see Hydrate positioned to either be a really, really strong company on its own organically and through M&A, or potentially to get acquired in the next 3 years. So can you explain what Futura Health and Wellness does and its business model? So Futura was originally a software company incubated in-house by VST. It was originally called Draft Label. Their focus is they've got a SaaS-based telehealth platform, a pharmacy, and they've got a line of their own kind of proprietary medical formulations. Their real focus, though, is on the longevity, biohacking, personalized preventative care kind of space. They built a B2B model, and they've started to work with practitioners and clinics on being able to license their tools and technologies through there. But again, their focus, this is an exciting area for us. It's really around preventative care, longevity, and biohacking, and that sector. So that's Futura Health and Wellness, and they're planning on to be listed by Q2. The next kind of group of questions we got were around dividends. So long-term shareholders know, the dividend strategy was to benefit VST shareholders and kind of help to build a base of investors for our spinoffs. And the last in 2021, that's where we gave out three share dividends in Game On and in VRAR. And for whatever reason, it could have been the market, it could have been a number of things. The share price for the companies that we issued a dividend in kind of declined, and so we didn't see it as a benefit to VST shareholders in that they received something that declined in value. So it could have been the overall negative sentiment in the market. It could have been a variety of different things. We are still big believers in a dividend strategy, but I think before we look and explore doing that again, we really would want to see the overall market climate improve before issuing any more dividends. And I think maybe exploring the dividend strategy on is it better to issue cash as opposed to shares. So we still like the dividend strategy long term. In the short term, I think we would wait for overall market the climate to change before kind of revisiting that. Share ownership. So why you were buying VST shares? Why are you not buying VST shares? So just a note, I have not sold VST shares. I've been a net buyer of VST shares. At the beginning of 2023, my plan was to start to buy a certain percentage of the average daily trading volume, and did do that for a period of time. When there's a blackout period, so a material event happening, whether it's financials or a spinoff or definitive agreement or a new product release, there are certain times where I fall into a blackout period. And so originally there were some blackout periods that kind of prevented me from buying. And then it became a bit of a challenge. So if anyone's followed the buying patterns, it's given that our average daily trading volume wasn't significant, sometimes the cost of placing the trade was greater than the cost of buying the shares. And so I came out of the last blackout after our Q3s were released on November 30th. And I've just been looking at a better way and more efficient way to do this. One of the things that I'm exploring is to see if there are large blocks of shares that a shareholder wants to sell privately. So I think I'll explore a combination of continuing buying on the 5% of average daily trading volume, maybe not every day, but like when the volume hits a certain level, just so that it economically makes sense. And then two, to also look to consolidate if there's larger blocks available. Given the tough climate for tech companies, how are your portfolio companies doing, and how do you monitor them? So I think there's a couple of things there. One, our investment strategy, we're investing early into companies. So a lot of times we're focusing our investment on the founder or founding team and their ability to, that's because we're betting on the people in a lot of those cases. So it's their ability to kind of handle adversity. Two, given that we come in early, one of the things that VST provided for a lot of our portfolio companies at the early stage was back office kind of services. So we get actively involved. So advisory, our team is involved in those businesses when we have a material stake. So it's not worth us if we have a percent ownership of a company, but if we have anything above 10, 12, 13% material holding, we'd want to be actively involved. Mentoring, and a lot of times we're handling their back office as well, so bookkeeping, accounting, and things of that nature. And so that allows us, so at the very beginning, we're betting on the person and developing a good relationship with that person, but there are other types of mechanics that allow us to continue to make sure that those companies are in good shape. And if they're not, then if it's a core holding, we'll get actively involved, which we have in a number of our cases. At the end of every year, we have a third-party agency that actually goes into all the larger portfolio holdings that are private, and they request a ton of information from those companies, which allow them to identify what they think that the value of that asset is at any given point in time, as of December 31st of that year end. And so in some of those KPIs and metrics, we track on a quarterly basis. Not all of them, because it's hard to do that for those companies, but we keep a very good track of our core holdings. And so given that we're actively involved. Any news out of Stardust, Solar, or any other companies being spun out? Again, mentioned, happy to announce they signed a definitive agreement with a capital pool company yesterday, and the goal is to be listed in Q2 of 2024. The other is Futura, which again, they amalgamated earlier this year in 2023, and their plan is to list by Q2. We have another company that's private, Insu Therapeutics. They will most likely stay private, but just to note, there's been a lot of interest on the US side, on the NASDAQ side, for them to explore listing there, primarily because there's a huge risk appetite for like the biosciences and life sciences space on the NASDAQ. So these are pre-revenue companies, but with tech or IP that's where the market size is significant. There are a couple of companies, one which is dropped significantly because they had a poor finding, called Structure Therapeutics, another called Oramed. So when you look at some of these pre-revenue companies in the life sciences sector and space, their valuations and the amount of capital that they've been able to get access to on the US markets is significant. So Insu's had a number of suitors that have tried to push them to look at that, but nothing set in stone for that. Yeah. I'd love it if you could bring on management or founders from the portfolio companies to get to know them and their businesses better. Specifically, can you bring on the CEO of VRAI? This is a great idea. We actually had another shareholder, Jeremy Diller, who suggested, we were talking about a company called Copilot.ai, and his suggestion was it would be great to have some of those CEOs come on webinars like Shane Madden and Matt Bailey and others have done. So definitely starting next year, we're going to start to have webinars where more of the CEOs of our core portfolio companies can come on and share their story with VSC shareholders. So you get an idea of like what else is under the hood, especially with some of the private companies, which you may not see as much of. So great idea and great plan. With VRAI, again, the last 2 years have been tough years for them from a restructuring and transition perspective, but we feel really good about their synthesis VR product, like their core product. We like the sector and space, and there's a couple of new releases they have. They've now gone into their own game development, but there's another AI avatar tool similar to like Replica and Persona or Synthesia.io out there that they have dropping for the B2B market in Q2 or Q3 of next year, which we're super excited about. So for them, again, it's they one of the things we've told them is, again, communication is important. It's okay to go through restructure. It's okay to have challenges, but investors want to know what's happening, and that communication needs to be improved. Can you compare or contrast Hydrate to other public or private companies that have similar business models? How are these companies valued? So one of the other reasons why we were super excited about Hydrate is that when we look at comps in that sector and space, we're seeing companies in that sector trading at between 8 and 10 times top line revenue. And I think Hydrate's indicated in past webinars that that they're hoping to end 2023 with around 13-14 million in top line revenue. So if you look at just like 8 times that, you can do the math, right? So we feel that Hydrate right now is trading at a market cap of around 15 million Canadian dollars, which is maybe like 1 times top line revenue, whereas comparables in their sector are trading at 8 to 10 times. So again, it's a tightly held stock. So we're excited that value, that there's a lot of value to be unlocked in that. So yeah, the comps on that are significantly higher, and yeah, we're excited given that as a SaaS-based company, it's growing by 40% year over year, significantly over 40% year over year, and 40% is kind of the benchmark for like exceptional in that category. What opportunities are you excited? Is VST most excited about? So excited for Hydrate. We're excited for Game On's platform. Their new partnerships, like La Liga and Sportsology. We think they're going to have a big year. We also think, again, if anyone's following the Web3 sector in space, it's been heating up. So they've gone through 2 years of crypto winter, and so we think that they might have a very strong year, given that they're a publicly traded company. So as interest falls into that category, and they're working with tier 1 partners that people still don't know how to set up wallets for buy crypto, but they can get access to a company that has exposure to a product that works by investing in Game On. Same goes for VRAI. Again, we think that it's trading, we did the rollback was done in November. It's very tightly held. They're in a sector, their business covers virtual and augmented mixed reality, AI. There's a bit of Web3 in their business as well with their digital assets. And so again, there are a lot of things where we think it could be their time, and their cap structures, in good shape, and the business generates revenue. So we're excited about that. Stardust, it's a US election year next year. Energy, we think, will be a big question mark, or part of a lot of the campaign platforms there. Stardust has grown significantly this past year, and we think, again, with the listing and the ability to use their stock as currency for some M&A opportunities and growth in the US, we're excited about Copilot. Again, Copilot.ai, another product we have, which I think VSC's ownership's around 22%. Core holding, it's significantly grown, really well managed. They're expecting to do a large raise at a significant multiple to what our cost base was on it. So we're excited about that. And Insu, again, that's the thing about Insu is that from an impact perspective, again, like oral delivery of insulin can solve a lot of problems in developing regions and areas where people don't have access to much needed insulin, given that they don't have access to a refrigerator. And two, just the size of that market. So it's exciting from an impact perspective, but also the size of that market is significant. So very excited about that. And our partner, the partner BC Diabetes and University of British Columbia, has a really strong track record in the life sciences sector. I think the last large exit from there was AbCellera. So good partners, good team, and really exciting for us. Crypto overall seems to be a bit of at a tenuous point right now. How much of VST investments wise revolves around crypto in some way? So Web3 has always been a core part of our business. I would say, like, right now, from a forward-facing perspective, Game On, VRAI, and CQT are probably the ones that touch digital assets the most right now. It's something that we're continuing to watch and we're bullish on long term. There's IP that we had been incubating in that category as well that we've continued to work on. And if the market climate for that sector and space is attractive next year, we'll probably drop some of that, like to spend more time on that. But it's a sector that I would say that right now, from a forward-facing perspective, those three, Game On, VRAI, and Covale and CQT are probably those three categories. But there's other IP there that we may bring to market if that market picks up. Another question again, sorry, around VRAI. So again, VST has a large position in that company, and we believe that we can unlock value for our shareholders. So it's a priority for us to get that thing going. The core product, the Synthesis VR software platform, again, like, it's a strong operational team. They've got, in their market space, one of the top products out there. They're growing. They've got into game development. But I think what's most exciting, about that is, apart from a strong cap structure, good sector, good team, we think that sector will get a lot of attention next year, and then especially around their new product development. So, they've started to build their own games, which is key. It's something that's more scalable outside of just their platform console. This new AI avatar tool, which we've seen valuations and investment interest in interesting business models around, like Replica, Synthesia, Persona. Like, these are some tools that, again, SVR has been, or XR Immersive has been building, that we are excited about, and also just the VR enterprise training tools that they've built. In a VR, from a VR and AR perspective, the enterprise training market has been significant, and they've started to break into that category. So we think that'll be big for them. So what they really need to do, though, is just do a better job of communicating. They need to get on, we'll get Shabir onto a webinar, but I think at least once, 1 to 2 communications on a monthly basis, so that investors and shareholders can start, they can start to rebuild faith with and trust with them. This question that this came up a lot. I'll answer it, but again, not investment advice. It's it's a general question around, do I think it's a good time to invest in the market today? I mean, it's funny, like tens of thousands of people, will turn to Google or even ask ChatGPT, is it a good time to buy? I feel like it's a loaded question, because investing is so subjective. It really depends on an investor's investing goals, and then time horizons, rather than what the market's doing on a given day. The first thing I would start off by saying is, like, if you have, savings to invest, and you don't need that money for, 3, 4, 5 years, then it's, sometimes it is a good time to look at, the market. I would not suggest making any wholesale changes to your portfolio strategy based on expectations of short-term gains. We're not focused on the short-term gain business. I think that, that we've seen that in the past, the stock market could go up or down in the short term. But through every bear market, we've kind of seen stock prices rise to new highs. So as a long-term investor, for me, that's kind of sort of the point. Even if I'm queasy about finding the exact sweet spot, but I believe the market will continue to rise over decades. I plan to buy when the market is low. And for me, personally, when I look at whether it's when we're looking from a VST perspective at opportunities and companies, we're seeing things that are at an all-time low. So again, if you have money sitting on the sidelines, you don't need it, and you have a long-term investment horizon, I definitely think that there's some good opportunities there. And again, from a VST perspective, that's the idea of having a diversified portfolio. And we do know that there are investors with VST that have been dollar cost averaging, which again is a strategy that, if you believe long term in a company, could be helpful. So no one can predict what's going to happen next year, but I think that and an investment strategy is so subjective to the individual person. But from my point of view, I think that we do see some positive sentiment coming into the microcap space next year. I do see a lot of things on sale right now, and we're long term. So if we find something that we really like, and we would take advantage of it. So, what's our game plan for 2024? Again, focus on Hydrate, focus on the spinoffs, focus on releasing new companies. Some of those new companies, I should mention too as well, have the ability to generate cash flow, which also kind of goes directly to VST. And then investor outreach. We really need to do a better job. We get it. 2 years, the stock's been flat. We need to get new investors into VST, and that, I would say, like, those are the 4 things: growth of Hydrate, 2 spinoffs, new companies coming out that can generate cash flow for VST, and investor outreach. So this kind of takes us to the end. I really appreciate all the questions that were sent in and came in. If I didn't get to them, I will answer them. I'm making a note of the ones that got sent out on the chat that came in, that I can answer for everyone later. I'm so sorry. There are a couple questions that have come in that I'll make sure we make a note of, and I'll share them with I'll get Abby to share them on the Discord channel, if that's okay. Again, what we'll also plan to do is to have another webinar within the first 2 weeks of January, as well. So I apologize if I didn't get to your question. Thank you so much to everybody. I hope everyone's having a happy holiday season. I wish everyone a happy new year. Thank you, everyone. Cheers.